All right, today we're going over tip number 7 on the investment checklist, trading volume. So the reason I wanted to cover this today is because I've seen a lot of questions recently on core.com where investors are asking lots of questions about penny stocks. And that was an interest of mine as well when I first got started with investing. Didn't have a lot of capital to invest with, so I figured that was probably the best way to start. But the problem with buying penny stocks is they have very little trading volume. And that could hurt us because if we're buying a stock that has very little trading volume, we're probably not going to be able to buy the stock at the price we think we're buying. And even worse, when we go to sell our shares, if we're able to buy at all, we're definitely not going to be able to get out at the price that we anticipate. So we want to buy shares of companies that have plenty of trading volume. And this is the number of shares that are being traded on any given day for a particular company. So it's very important to look at because when you do your research, you may find a small company that's growing at a fast rate, looks really good, it may be undervalued, might pass lots of the items that we have here on the investment checklist. However, there might not be a big market for that stock. So when you look at any financial website to get a price of the company you're looking at, you're going to get a single price, which is called the quote. So for example, when I go to Yahoo Finance right now to get a quote for Apple, it tells me that the price per share is $121.35. Now, quick side note, I'm recording this on December 12th, 2017. However, this slide is part of my investing course, which I put together in February. So since February, when the stock was actually $121 a share, as of today, it rose to $171, almost $172 per share. So Apple's had a pretty good year so far. However, getting back to the price, let me go back here. It was quoted at 125.30, $121.35, but that's not the price you're going to get. That quoted price is the average between the bid and the ask. So the bid is the price a buyer is willing to pay for a stock, and the ask is the price that the seller is willing to sell a stock. And if we're buying a stock, we're going to pay the higher price, which is the ask price. And if we're selling, we're going to get the lower price, which is the bid price. So the difference between the two is called the spread. So we don't want to buy a stock that has a big spread. If it does have a big spread, that means it's a very illiquid stock. So let's take a look at Disney. And if you go down a little more than halfway through this chart, it says total VOL, that's total volume. They have close to 8.5 million shares traded each day. Now, the current price here is $110.65, but again, that's not the price. So the bid, if we're going to sell the stock, we already own it, we're going to sell it at $110.30. If we want to buy Disney, we're paying the asking price of $111 a share. So the average between those two is the quoted price, which is $110.65. The spread's the difference between the bid and the ask. So the spread here looks like it's big at 70 cents, and that's because as I did record this originally, it was after hours. So there's a little bit bigger spreads after hours, but usually on a company like a Disney or an Apple that has millions of shares being traded each day, there's really only about a 1 or 2 cent difference between the bid and the ask. So here's a thinly traded stock, and this is how buying a company with a low volume, typically a penny stock, can really come back and hurt you. And a penny stock is usually a stock quoted not just at pennies, but $10 or lower. This is Leap Therapeutics. I don't know anything about them. It could be a great company, just not a great stock. I saw this on the NASDAQ biggest decliners list today. And as you see here, the total volume for Leap Therapeutics is only 25,000 shares. So the price at the top, the quoted price is $6.42, but that's not the price we're going to pay to buy it. The asking price is $14, and the bid is just $4.68. So you're going to be buying this quoted $6 stock for 14 bucks. So it's not quite what you expected to pay for it. And if you did buy it and you had to sell it for whatever reason, if you had to sell it right away, you're only going to get $4.68 for that stock. So because it's so thinly traded, the spread is a ridiculous $9.32, which is just a crazy spread. So we prefer companies that have as little of a spread as possible because a smaller spread means there's a bigger trading market for it. It means it's liquid. The worst thing to happen to you is that you buy a company that has little trading volume. It either didn't work out and you want to cut your losses, but when you go to sell the stock, you realize there isn't a big market for that company. So you will either be stuck with it or you're going to be selling it at a much lower price than expected. And then the other scenario is that you want to take gains on a stock that you own, but it's a thinly traded stock. So when you go to sell it, you might be giving up all the gains because the spread is so big. So the spread is a very good indicator of liquidity. And there's just 1 or 2 cent spread when the company is very liquid, meaning there's enough shares exchanged each day that you can be sure that the price you are buying or selling is very close to the quoted price or the expected price that you think you're going to buy or sell it at. If the spread is large, then the company isn't very liquid. Let's just go back here and take a look at Disney real quick. Because when I recorded these slides, it was after hours. Now it's during the trading day, and the quote is $107.04, which is also the bid price, and the ask is $107.05. As I figured, it's just a 1 cent difference on a widely traded stock. The rule of thumb here is to buy shares of companies that have a minimum number of 500,000 shares traded daily. Just realize there is a little typo there, so we want to buy shares of companies that have a minimum number of 500,000 shares, not $500,000. So 500,000 shares is our minimum. And we can find this on the trading platform that we're using. I use Thinkorswim through TD Ameritrade, and it's on that quote screen that we just saw. We can also find this on Morningstar.com, Yahoo Finance, or any other financial website. I hope this helps. If you guys have any questions, always feel free to email me. If you have any ideas on things you want me to talk about, shoot me an email at tom@wallstreetvalue.com. And don't forget, we're starting our 16-week course in January. So if you want information on that, shoot me an email as well. Talk to you guys soon.